You're listening to the Moose on the Loose, your 10 minutes action-packed financial podcast with your host, Mike Yahoo. Hey, what's up, Market Moose? Mike from the Moose on the Loose. How are you doing this Thursday? Good news, bad news? I don't know. We're going to take a look at what TD has to tell us about their quarterly earnings. It was reported this morning. That's why the podcast is a bit late this morning. But yeah, so we're going to talk, we're going to have like a whole segment about anti-money laundering investigation, AML. But let's first start with the regular results, like the usual stuff, and then we're going to move on to the AML, and I'm going to tell you what does it mean and where are we going with this and what you should be doing with your stocks, and like not if you should buy, hold, or sell, but rather which kind of metrics or which kind of like decisions you should be taking, like the framework, the thought framework. So let's get started with the good news, and then we're going to talk about the bad news, right? So revenue was up 8.3% to 14 billion. So that's pretty cool. Earnings per share, adjusted earnings per share, outside of the anti-money laundering provision, was up by 5% at 205. So if we live in a world where there's no AML and TD's making business as usual, it was a pretty good quarter because their core business is actually doing pretty well. On the Canadian side, the personal and commercial segment, the net income was up 13%. So while their provision for credit losses are higher, the like quarter after quarter, the fact that they are able to underwrite more loans and they charge more because interest rates are still relatively high compared to what they were a few years ago, well then there you go, you got this ability for TD to do regular banking and generate double-digit growth, which was just great. On terms of wealth management, it was flat, so nothing happened really there. And then the wholesale banking, which is like the equivalent to capital markets for many of other banks, was up 16.5%. So a lot of trading activities, a lot of underwritings, and a lot of like advisory fees. So there are a lot of business going on in the stock market, and TD is definitely taking a good share of that. Ironically, when we look at the first quote from the CEO in the press release, the CEO says, well, TD delivered record revenue and net income in Canadian personal and banking, continued operating a momentum in the US with strong results across the market-driven businesses. All right, so as you can see, when you're reviewing like quarterly earnings, the CEO transforms himself in such kind of like, I don't know, like a used car salesman or something. They're going to tell you anything that you want to hear, and they're going to leave the rest a little bit lower in the press release to, well, I don't know, like make you discover what really happened. And this is now where we're going to go, because that was the good news. The good news is the regular business is doing well. TD has been probably one of the best bank when it comes down to regular banking activities. So whenever you're talking about personal and commercial business, like banking activities, they're just among the best. They have like a strong underwriting process. They manage their provision for credit losses as a boss, and they find ways to grow their business. But now we have to hit the US side. So on the US side, the US segment reported a net loss of 2.2 billion. That was not good. Even Schwab was down 7%, so nothing great here. What happened is they added another provision for the anti-money laundering investigation in the amount of 2.6 billion. So total so far, they are now at about 4 billion in provision for credit for the AML investigation. The worst part is we don't know where it's going, and that is the scary point. So TD has been saying that they have been reinforcing their AML practices, making sure that it's not going to happen again, yada, yada. I mean, everything that everybody wants to hear, right? They're going to be tougher. They're going to be amazing. But yet, regulators are on their back, and now TD's kind of, well, the good news, I guess, is they expect to end that process and get the sentence, I would put it that way, by the end of this year. So that's a good thing, because the show will not go on for like 2-3 years, and we're actually going to have a ending like sooner than later. I like that part. What I don't like is TD obviously expects that they will be paying a huge fine for that. As I told you before, the fine is not great, but that is just a slap on the wrist. It's going to be a very bad year for TD, not much like profit after that for 1 year, but next year it would be business as usual. We continue to grow high single, double digit, and then everything is fine. So that would be the like rainbow and unicorn ending. I don't think it's going to end this way. And this is where the problem is. The problem is the fine is a one-time fee and then you move on, but it is very possible that regulators will put a brake on all TD's banking activities. So it happened in the past with Wells Fargo. They were caught doing something worse, in my opinion, because it was like malpractice around a lot of branches where they were opening a lot of accounts. They were kind of like forcing people to open accounts, so it was like aggressive sales practices that were not great. As opposed to TD, where it was a big thing, the EML, like the crime or the organized crime organization ran like several $100 million, and they were able to launder all that money. So of course it was bad, but it was not like a politic across the entire bank. So anyway, we'll see how it goes. But if it happens, if regulators say, well, now we're going to put a freeze on your growth in the US for X amount of years, that is going to suck big time, because TD's main growth vectors are actually in the US. They grow there because they have known the business well. They grow by acquisition. They are able to expand more branches. And now they would be stopped for like a few years, maybe 2, 3, 5 years. I mean, I don't know, maybe 10 years. We don't know. And that is the scary part. So now, what should you be doing with TD? Well, first, the good news is you're not going to have to wait too long to know how much you're going to suffer, because by the end of this year, you're going to be settled. You're going to know exactly what's going to happen. But if you are not willing to take that kind of risk in your portfolio, there's no point of waiting. I mean, you already make a stance, say, you know what? I'm done with like regulator risks, and I'm done with investigation and not knowing what will be the penalty. So I don't want to have this kind of risk in my portfolio. So now you know what to do. On the other side, it could be a great opportunity for investors. So again, it's always the risk reward thing, right? On the one side, if regulators put a huge brake on growth in the US for TD, well, then it's going to be a dud for a few years, and there's not going to be much money to be made, and you'll have to be very patient to ride that train. On the other side, if not, this is not what's happening, and TD can just like get away with it with that slap on the wrist, well, then it's going to be amazing news, because then they will be able to continue to grow next year. And as you saw, the rest of the results were actually pretty solid, and what they are really good at what they do. So they got caught doing like not being strict enough and not following their stuff. So that's really bad, but maybe it's going to be for the better good. So it's all about which kind of risk you want in your portfolio. Like, for example, I do have like some technology stocks. I don't mind having companies that seems to be overvalued and trading to a high P ratio. This is the kind of risk I'm willing to take in my portfolio. Am I willing to take investigation risk? I don't know. Like, that is like a complete different other story. And this is what you have to decide. Despite all that, because I want to leave you on a good note, despite all that, the CET1 ratio, so the one that you follow if you want to make sure that they have like enough capital, is still at 12.8%, which is pretty solid. Even though it was better before, even with the AML investigation, they're still showing a very, very solid capital ratio. So nothing wrong going here for TD. The problem is about the growth perspective moving forward. Now, if you want to learn more about what's going to happen with all the banks, I'm preparing a full quarterly review next week on the YouTube channel. Every quarter, I review the big six earnings. So we start with TD on this podcast today. The rest of all those reviews will be done on the YouTube channel next Thursday, so next week. So be sure that you go onto the Dividend Guy YouTube channel, you subscribe, and you put the notification on to not miss that video. That will talk a lot more than just TD. So, all right, Moose, I hope that you will have a great day, and we're going to talk again tomorrow. So until then, don't forget to stay invested. Hey, welcome to the disclaimer. If you're listening to The Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.